Hey, Angeli, how are you?
Oh, hi, Kayla. So sorry. I just had my headphones in. I was just catching up on the latest episode of Thrive Loud with Lou Diamond.
Oh, I'm totally hooked. I just binge listened to the last 3 episodes. The inspiration it has always gets me through my day.
I know. Between the entrepreneurs, CEOs, best-selling authors, thought leaders, amazing speakers, and famous people and personalities, there is just so much great content.
Right? Lou really taps into the heart and soul of the guests and totally decodes how they are able to thrive.
Yeah, which interview do you like most?
Oh gosh, that's impossible to choose.
I know, I'm trying to pick. How about favorite question? Your all-time favorite movie?
Gotta run, Angeli. Keep on listening.
Check you later, Kayla, and thrive loud.
Get ready to thrive loud with Lou Diamond.
Welcome, everyone, to another episode of Thrive Loud with Lou Diamond, connecting you to the most inspiring and amazing people that are thriving each and every day. I'm your host, Lou Diamond. Today on Thrive Loud, we have the founder of FE International, the investment bank for internet businesses, a serial entrepreneur and expert. He has consulted hundreds of internet companies and entrepreneurs on exit strategy, growth, and business development, specializing in advising in the M&A of SaaS, e-commerce, affiliate, and content businesses. Thrive Loud listeners, this is going to be a fun, interesting conversation with Thomas Smale. So, Thomas, how are you today?
I'm very good. Thanks for having me on.
Excellent. So this is obviously one of the busiest universes of activity, the most up and coming places, SaaS companies, internet businesses, and probably for the last 10 to 15 years of just unbelievable stories of helping to put companies together. I'd love to hear how this all came together and how you kind of got FE International started and how this became your niche. So if you could you share with the listeners a little bit of the background story, not the full rewind out of the womb a bit, but how this became your specialty and what you focus on?
Yeah, sure. So just at a really high level, like back in 2010, when I founded the company, I was at college. I was buying and selling small websites to eventually just make some money to pay my way through college. I didn't really work a job. I was doing that. So I was buying something for $50, selling it for $200, buying a website for like 500, selling it for 1,000. And I did that quite successfully for a while. What I realized is that most people at the time were not treating websites or online businesses like businesses. So that was the opportunity I spotted. And then at the time I wrote a book about how to buy and sell websites, effectively to make some extra money. So that was 2010. Off the back of that, people started approaching me who had successful online businesses saying, well, you've written this book about it. You know how to sell a $500 website. Can you sell my $20,000 website? And back then, there weren't really established marketplaces or M&A firms or brokers to sell an online business. Lots of people owned them and they existed, which, like you said, is becoming more and more kind of popular and common to own. But there was nowhere to sell them. So I started selling them for people from there. Because we were the only ones really doing that at any sort of scale, it really just kind of grew through word of mouth. Business owners talk to other business owners. They do things like listen to podcasts, like your podcast. People will learn about the industry, speak to like-minded people. So then we grew a lot through referrals, and since then we've just kind of continued to grow. Same marketing channels, word of mouth has always been the strongest source for us, just because business owners like to talk. So that's how we started out years ago. And then from there, it's really just kind of compounded and matured into a bigger and better service, more people in the team, more offices, more deals.
Thomas, help the listeners understand the breadth of that. Within a year, typically, how many companies are you helping with across your platform?
Yeah, so this year we will sell, so we'll represent a seller, close a deal on their behalf. This year, we're on track to close around 200 deals. As a firm, in the last 9 years, we're at around 800 now. But that's been increasing pretty significantly. As our team grows, we can do more deals. Deals get bigger. So about 200. So about 4 a week, if you break it down like that.
Yes, no, I totally get it. So obviously, we're seeing almost hockey stick-like and exponential growth. Along those lines, obviously, I imagine the deals themselves must be getting larger.
Yeah, so I'd say the way we look, so we've always done deals anywhere from $20,000 and up. It's just the upper limit or the upper level of what we're working on increases every year. So at the moment, if you go back 5 years ago, we would not have too many deals in the 7 or 8 figure range. Now our average deal is in that 7-figure range. And at the moment, we're working on a $35 million deal, a $50 million deal, a $22 million deal. So we have a real range of larger deals and larger businesses as well. But we do continue to work on small businesses as well, because we find that a lot of entrepreneurs, particularly serial entrepreneurs, will own multiple businesses. And just because it's a small business they happen to own, it doesn't mean that they're not someone we want to work with, or that they might have a bigger business to sell us in future. So we're always happy to help people regardless of the size.
So let's actually talk a little bit about that part, which is the actual dealings of figuring out whether or not they want to work with you or not. Rewind on that question, which is really, you work like a traditional investment banking firm, getting services or getting a percentage of the deal. How is your revenue model structured?
Yeah, that's exactly right. So almost all of our revenue comes from sell side fees. So we sell your business and we only get paid when the business sells. If it doesn't sell, we don't get paid anything. We don't get paid anything up front, only when the deal closes. And then we get as a percentage depending on the size of the business.
So we have a lot of entrepreneurs that listen to Thrive Loud, and obviously many of them have their own unique online businesses and have grown things just like from their kitchen into offices, into large companies, or still working in certain ways. For sitting on the advising side, I guess, and this is a question that no one really actually knows, because everyone always sees growth and the growth continues and they're able to figure out how to grow the business and own that business that's there. But sometimes that's not the right decision. How do you work with these companies or also help them to understand what the best exit strategy, and I'm putting the word exit in quotes because sometimes getting out of the business isn't the actual strategy, but that's where you focus. How do you work with them to figure out when's the right time to engage someone like you?
So I mean, the first thing I say to everybody I meet, everyone I speak to, is it's never too early to have an initial conversation. Chances are, if you ever do hire us, it's not going to be for many, many years beyond first point of contact. So we're always happy to have a chat. The most important thing to do if you own a business and you do eventually want to sell it, which is almost everyone who starts a business, if you can sell it, that's a lot more lucrative than many other things you can do with that business. The first thing you really need to do is establish what you're trying to achieve. And there's no right or wrong answer to that. And there's no way I can answer that question for you. So for most people, it's one of two things. It's either a time-based goal. So I would like to sell my business within 12 months. Or I'd like to exit my business within 12 months. And what that exit I would hope would be in the form of a sale. But there are lots of other ways that could be. You could shut the business down. You could sell it to a partner. You could sell it to friends or family. You could merge it with another business. Lots of different things you do. Or people have a value-based goal, which might be, I would like to sell my business for $1 million, $10 million, $100 million. It doesn't really matter what that number is, because everyone has their own aspirations, their own goals. If you want to sell a business for $10 million, you're probably going to have to do more work than if you want to sell your business for, say, 100,000. So getting an idea of those expectations is something you can do yourself before ever speaking to us at all. Once you know that, the first thing we do, and this is something we offer free to anyone who has a business, which is an online company, which is something that we would take on and be able to sell. We offer everyone a free valuation. And the reason we do free valuations is to give you an idea of where you're at compared to your goal. So if you want to sell your business for $10 million, and I tell you today your business is worth $8 million, then chances are the exit strategy or exit planning, there's not going to be a huge amount you need to do to go from 8 to 10. But if your business is currently worth $100,000 and you want to get 10 million, then you might need a much more drastic plan. Hence why we do free valuation. We can give you kind of a health check, so to speak, for your business, where it's at right now. And then from there, you can figure out how that aligns with your goals, what you might need to do, and how drastic that exit plan needs to be. For some people, it's literally just as simple as continuing to run their business as it is. And for other people, it's you might need to pivot your strategy. You might need to hire more people. You might need to change your goal. Sometimes not every business can be sold for $10 million. Sometimes you just have to kind of maybe be realistic, take emotions out, and go from there.
Part of the mindset of the entrepreneur when they're coming up with an idea, to your point, many of them are trying to think, hey, how I can create something that someone else buys. Let's talk about the buyers themselves. Obviously, since the first time you started out in the size of the companies, I imagine in that kind of upward swinging chart of the amount of deals you're doing, the size and the identity of the buyers of these businesses is changing. Can you talk a little bit about the makeup of who's jumping in and taking these companies on as investments and assets for their organizations?
Yeah, it's a good question, and completely right. As deal sizes changes and business models change, the type of buyers start to change as well. I would generally categorize buyers into three different categories. And in really simple terms, you could look at them as the first group being individuals or partnerships looking to buy business. That could be you or I. We might have $100,000, right. You might have $1 million, you might have $10 million. You want to buy a business. That might be so you can quit your job. That might be to create some side income. There could be for all sorts of different reasons. The second group are strategic buyers. Strategic buyers would be someone, so that might be if you want to buy a competitor. That's usually what you consider a strategic buyer. Those deals happen at all levels. There are strategic deals getting done for $10,000, strategic deals getting done for $10 billion. So they happen everywhere. And then the third group, at really high level, you describe them as private equity firms, but effectively it is people who have raised money from other people to buy businesses. So that might be someone who has a rich business partner or someone who have access to capital. So often we find some of the most effective buyers we work with would be a really good operator, someone who's really skilled, and then they partner up with someone who's really good at raising money. The guy or the woman who can raise money will go and raise money, and the person who knows how to operate the businesses will go and do that, and they will combine. And then you also get a more formal private equity firms where they've raised billions of dollars, and then they're looking to make acquisitions. And then depending on the size of the fund, that will generally dictate what they're able to buy. So if you've raised $1 billion, the smallest acquisition you'd probably make is, say, 5% of that. So right. You might look at a $50 million deal. There's not really a hard and fast rule, but I'd say that's a good indication. If you've raised $100 million, you might look at a $5 million deal. So as you probably expect, as our deal sizes get bigger, it also starts to open doors with different firms, but that also gets too big for some other people. So the average individual like you or I, probably not buying a business for $10 million ourselves. More likely, if we wanted to do that, we would find people who have money to help fund it or find investors who are going to invest in that particular deal. So it definitely changes as deals get bigger.
So let's talk about two variables of time. My first aspect in question for you about time has to do with, is the timeline from which the companies that you end up working with selling, is it a much faster period of time that they've started and they've seen unbelievable growth and get acquired? Or do you feel that's getting longer? Or maybe that's just indifferent and inconsistent across the clients you work with?
I think it really depends. There's no hard and fast rule, I'd say, in general.
Okay.
Yeah. So really
the other aspect of time has to do with, since some of these deals are now getting larger, are you, from your end, finding the time it's taking to actually get the deal done taking a longer period of time to do so?
Yeah, there's definitely correlation between size of the business and time it takes. As a really general rule, if we use three levels of business, so let's say one was 100,000, one is $1 million, one is $10 million. Generally speaking, we would expect to close a $100,000 deal in about 30 days, so about 1 month. And then that's about 2 months or 60 days for $1 million deal, and about 90 days or 3 months for a $10 million deal. I mean, there are some exact numbers that are a little bit different from that, but as a very high level average, that's a good place to start. It's primarily because as deals get bigger, it's not necessarily that the businesses are more complex. Often some of the bigger businesses we sell are quite simple, to be perfectly honest. It's really just a case of often at that level you start to have more third parties involved. So we're working on a mid 8-figure deal at the moment, and that has a kind of big four accounting firm involved in the due diligence. And then there's a large law firm involved in the due diligence. So as you can imagine, these things just take time. There's lots of documents. There's not necessarily any problems with the deal or with the business, but it just takes time, particularly if you're raising money from external investors. You have to be very careful and follow due process before you make an acquisition. You can't just spend investor money without doing the research or hiring expert third parties.
Thomas, in the opening, I broke out those specific areas that you guys happen to be experts in, SaaS and e-commerce. Are you seeing one particular industry more than not as like the hot area that people are trying to acquire today?
Not really. We've always, as a firm, as a founder, I've always been quite conscious that almost all of our revenue comes from sell side fees, so selling a business. So that does mean that I guess we have quite a high degree of risk in that particular area. So I've always been conscious to make sure that we work with a wide range of businesses and a wide range of buyers. So we try and avoid trends. We stick with things that we think is still going to be around in 3 years, 5 years, 10 or 20 years time. So that means that often there'll be a lot of buyers coming in looking for a particular type of business model. We continue doing what we're doing. Sometimes there'll be some years where a particular business model is more popular than others. But when it comes to buyers, we always encourage people to look at a broad range. Most people, when they start the search for a business, think they know what they want to buy. But my experience is most people actually don't know what they want to buy until they see it. So you might start out. One thing that doesn't really change is your budget. If you have $1 million, you have $1 million. You don't suddenly have 10, and you probably don't suddenly have 0. But you may start looking. So we had someone recently who came in saying, "Hey, I want to buy a software business for $1 million." And he spent 2 years looking for a software business, never found the business he liked. And then one day we had a blog we were selling about kayaking, which was not in any way in his initial criteria. Much smaller than the $1 million he wanted to buy. And it turned out that one of his favorite hobbies was kayaking. So he loved that business and ended up buying it straight away, has done really well with it because he was passionate about the industry, could write about the content, knew all of the different products, had a bunch of contacts in the space already. But he didn't really think on the way in that, I guess because kayaking isn't cool in that sense, it's not a hot business model, he hadn't thought to do that. He was like, I want to buy a software business because everyone's buying software businesses. So I guess in general, we try and steer people away from following the trends. And I encourage people to look at a broad range as possible. And as a firm, we're exactly the same. We try and work with a broad range of business models and help as many people as we can.
Thomas, just to give some background here, FE, International, what does it stand for?
Founder Exits.
Well, there you go. I love when names are so specific.
It sounds obvious when you get it. We rebranded like many years ago, but it's now Founder Exits.
Oh, that's great. Let's. By the way, we're here with Thomas Smale, who's has an expertise in a great niche in an area that is always a need because companies are always looking to get out and get into the next step. And obviously, we're learning all these different trends from 2010 till now. Obviously, you came off the bounce of a bad economy, which you got to go through on your own, seeing some of the internet worlds of where the economy was there. And we've had a pretty steady rise, up and down, nothing so crazy. Would you say that the economy dictates how your business is so much? Not so much on the, obviously the price level that what people are willing to pay, but maybe even the steady flow. Because you've been pretty steady and seeing steady growth. Do you anticipate, we may have some dips in the economy or whatever? Your thoughts on getting in and out of deals as this happens going forward?
Yeah, so I'm definitely not an economist. I do have a business degree, but I would definitely not consider myself an expert on economics. I think everyone who has any eye on the world economy thinks there'll be a recession coming at some stage. Pretty much, has to happen by definition, so it will come. When I started the business back in 2010, that was coming out the back of a recession. And part of the reason the industry got so popular is a lot of people had lost money in real estate, and the real estate market had dried up. You couldn't borrow money anymore. It was difficult. So money flooded into this industry because the returns from a buyer perspective were attractive. That then created a market where people who own online businesses now have a way to sell them with us or elsewhere. So business owners, regardless of economic conditions, there's pretty consistent demand for people wanting to sell their companies. And often, like when the economy's good, people are less likely to want to sell their business because there's a problem with it. When you're in a recession, people are more likely to have to sell their business because they have debt or they have a problem or there's some sort of personal reason why they need to sell their business. When the economy's good, often people decide to sell their business because valuations are high. There's lots of demand out there. So from that perspective, it really varies. I mean, I'd say there's pretty consistent demand for people wanting to sell. People always want to buy. People are always investing regardless of what the economy is like. It just may well be the dynamics of those deals will change.
So Thomas, let's learn a little bit more about you. Obviously entrepreneur-like, focused on lots of different things, and you've created a company. This is where I wanted to get to. Talk about you were doing stuff on your own and buying and selling and now have a multiple office, many employees working under the umbrella of F International. Talk about what it's like from you being that entrepreneurial-minded person doing and now being the leader running this team. Tell me what that feels like to you over these past years. Where's your happy spot, so to speak, where you feel you're at your best?
Yeah, so I mean, it definitely is a big transition. So I'd say probably one of the most important things for me is in 2012, my current business partner, Smale, who is also the CEO of the company. I brought him in. He had worked in investment banking for many years. So his experience was doing billion-dollar deals. My experience was doing $1,000 deals.
And you kind of met in the middle.
we met in the middle. He created all the processes. So he runs the day-to-day. I'm not good at running a business. He runs the day-to-day of the business. He deals with the team. He deals with the vast majority. My time is spent at conferences, at events, talking to potential clients. My job is to bring in business,
right?
Effectively, whether that's buyers, sellers, partnerships, all sorts of things like that. So what I think I'll say, one thing that's like important as you transition and grow your business is to understand what you're good at and what you're not good at. I think everyone, when they're starting out, I mean, I definitely had as a cocky kid, thought I was the best in the world at everything. And it turns out you're really not the best in the world at everything. And I'd say now in the company, we have just over 40 people. Every one of those people is better at their job than I would be on a kind of individual basis, which is a good sign. I think when you're starting out, it's more of an ego thing. You're more like, oh, I have to be the smartest person in the room, which I think definitely changes a bit with age. Like I'm in my 30s now. I started the company in my early 20s. I think there's definitely a level of kind of insecurity you have when you're younger, which goes away as you get older. And I guess prove yourself.
Yep.
Like peers, friends, family no longer are wondering if it's going to work. We're clearly well past that stage. So for me and Ismail, day to day, we're like, how do we build a $1 billion business? Not can we pay rent this month, which is what happens when you're starting out. So things definitely change. I'd say the other big change is really that your goals go from being very selfish to much more team orientated. So when I started out, I think every day I was thinking, oh, I really want this. I would like to do this. As you grow and as you hire people, you realize that actually your obligations are not really to yourself. I mean, I have like a wife, I have a family. It is important to me to be able to provide like both short term and long term. But I also have a team, and those team that they have, many of them are married, they have kids, they have dependents, they have financial responsibilities. So from that perspective, things really change because you start realizing that it's actually not all about you. You can't really, whether I like selling or not is kind of irrelevant because I have a team now. So it's definitely something to consider. I say this to a lot of entrepreneurs who are early on. It definitely seems like cool and fun to have a big team and a big company that makes money. But there are some pretty big considerations you need to think about before you start hiring full-time employees, because you will then have a I mean, you don't necessarily have a legal obligation in many states.
But you have an accountability to what needs to get done.
Yes.
Yeah, totally.
Yeah, exactly. Many places in the US, if you want to, you can just fire people for no reason. But if you're a good employer and you're a good business person, that does not even cross your mind. You are accountable for making the company successful, so your employees are successful and do well. So it's definitely something to think about if you do want to scale your business and you're relatively early stage. Are you ready for the responsibility that comes with having a team? Because it is completely different. You will not be day to day. The things I do today look nothing like the things I was doing 9-10 years ago. It's just completely different.
Thomas, along these lines, the interesting thing that I keep thinking about is how you, as the person, get through all of this. And I love asking guests this question, and that is, when you are having an off day, or it's busy, or the deals aren't flowing the way you'd like to, what practice do you seek, or individually you seek out, to get yourself back on the thriving track?
Yeah, it's a great question. I mean, I say any entrepreneur, this happens, not every day, but I mean, running a business is tough. I don't know anyone who runs a business who would tell you otherwise. I do think it's really important to have a support network. So firstly, internally, I mean, having a business partner is important. We're both good at different things, but we're both on the same page with what we're trying to achieve. We will talk to each other, and I guess we are good at solving each other's problems. Often if one of us has a problem, I guess by the very nature of the fact we're quite different people, the other one is often really good at solving that problem. So often just, I guess, delegating problems or that stress is a good way to start. And two minds is often better than one. You might spend 2 hours trying to figure something out that someone else will figure out immediately. And quite honestly, the main support network for me is my wife. Like, I tell her everything day to day. So she is a person that bears the brunt of the stress I have. And I've always found, I think without a wife, I'd be completely lost, to be perfectly honest. And also, I think it's important. This is one thing I've learned over the years and begun to get better at. In an industry where we work with clients all over the world who are all entrepreneurs, most entrepreneurs work all of the time. So by the nature of our clients, they are also working all of the time. So at any hour of the day, I can be awake and there are clients around. So one thing I've tried to do as well is start to get to the stage where I take a bit of a break when it gets to the weekend. Previously, I would just work constantly, never really stop. And I think that stress is one of those things that compounds. If you have problems and issues, if you just keep sitting there trying to work through it, that's not necessarily the best thing to do. Sometimes it's best just take a step back, go out for dinner, go to the gym, go for a hike, whatever you like doing, get out and do that and try and get away from business. I'd say that definitely helps as your business gets bigger and more established. Like, if I want to go take a week, not that I do very often, but if I want to take a week off and not really be available, we would be able to pay the rent next month.
Right.
9 years ago, that was not the case. If I wasn't working 100 hours a week, there would be no rent, no company, no nothing. So things definitely change, but it's definitely important to, if you want to thrive, like you say, to have a good support network. For me, it's a combination of personal and professional, and also just a team as well. It helps have a depth in team, and just to take some time out and do what you enjoy.
So, Thomas, I think a fair question after going through all you've explained and that key point that you made, that every business is always looking for some kind of exit. What potentially is the exit for FE International? What's the game plan that you're thinking about down the road?
It's a great question. I mean, for us, like, the sky is the limit in terms of the industry. It's only increasing. People will continue to buy businesses. One of our big focuses before we really even think about an exit, and like both myself and Ismail, we love what we do, so we haven't built the company to sell it. So to be honest, when I started out, it didn't even occur to me it would ever be sellable. So it's definitely not part of my goal. For us, it's really just offering more things to more people. At the moment, like I mentioned, we're very much a single service. We help people sell businesses. We get paid to help them sell businesses. There are many more things we can offer to that same audience. So for us, like, yes, we're 9 years in the business, but we're a very long way to go in the journey yet. So it's not something on the horizon.
Now, Thomas, our listeners have been listening for almost half an hour, and I've never addressed the question at the beginning. We all detect an accent, and I know that you reside in San Francisco, or in the San Francisco area. Am I correct?
Yeah, I'm downtown San Francisco.
Downtown San Francisco, but it sounds like you were from someplace else before.
Yeah, so I'm from England, or near London in the UK. So actually, the company started in the UK. We then moved our offices out to the US kind of five years ago now. So our head office is New York. And then we also have an office in a couple of other smaller offices in the US. And then also I'm in San Francisco. We have a lot of clients in the California area. So hence part of the reason why I'm here.
Yeah, and let's do the rest plug here. Share with the listeners, if you could, all the places where people can find FE International, yourself, website, social, whatever it is. We will put it all in the show notes, but it's always better when they hear it from you.
Sure, yeah, absolutely. I mean, the best thing to do if you want to learn a little bit more about us is go to our website, feinternational.com. Have a bunch of content on there, whether you are a business owner, whether you're thinking about buying a business, whether you just want to learn what the process looks like. Hence why we produce a lot of content, because I don't have anything to sell you today. Go read, learn about the process. If you want to speak to us about getting your business valued, or you think about buying a business, feel free to reach out. Our team is super active on social media. I'm usually quite busy and I'm usually on the road, so I'm usually not the best person to contact. But if you reach out to the team on social, they're great. They're always happy to put you in touch with the right person if you have a question. Or you can just follow us, and we have tons of content that goes out there, so you can learn whatever is relevant to you.
2 final questions for you, Thomas, here to wrap things up. What's your all-time favorite movie?
The Founder, which is about the McDonald's founding story.
Oh, really? I forgot his name. I'm blanking on it right now.
I can't remember
with a K, something. Oh, it'll hit me. We'll put it in there at the end here. That is a great story. And why does that specifically connect with you, or is it just because that's who you're dealing with all the time?
Yeah, I mean, I think it's really that. I kind of like get the story, like starting out. I think most people just see when you see a successful business, or what you perceive to be a successful business, most people just see the end of that journey. They do not see what happened at the beginning. Like for me, the first 2 years, I mean, it's still tough today, but the first 2 years were really hard. And I think that movie is a pretty good reflection of what it's like. I don't think it glamorizes what it's like to start out. I mean, effectively, if you watch the movie, it's about a guy who basically is a salesman driving around the US, not having much luck. I mean, that's much like what I experienced in my business. And yes, things have changed. I don't drive around that much now. I fly all the time. So right. The dynamics of business have changed. But I mean, I don't really like the word hustle, but I guess you'd call it hustle, the early hustle of just getting out there, being rejected a lot, getting up and keeping going, I think is a good lesson to everyone.
It's Ray Kroc, because it was losing my mind. I cheated. I looked it up while we were on the phone.
I won't tell anyone.
No, don't tell anyone here. Only the listeners that listen to the show. And last question for you here, Thomas. If you're walking down the street and there's that song that gets you motivated, that's basically your theme song when you're walking down, do you have one that's kind of like, that's my jam, that's the song I want to hear?
I don't. Actually, one thing for me, I like to keep decisions that I do not. So if I listen to a lot of music, but I don't really know anything about music. So I tend to just go for generic playlists, depending on the mood. So I have a Spotify subscription, and I'll just put a playlist on. I don't have a particular song that I'll listen to.
Thomas, it's not surprising considering you have a diverse client base that you work with. Your business is varied and has all different avenues there. It is not surprising that you kind of have that jack of all trades, different themes. So it makes perfect sense. Thomas, spectacular, informative, great information about what's going on with you. Obviously, continued success with FE International. We hope you had fun here on Thrive Loud today.
Awesome. Thanks very much for having me.
You got it. And to all our Thrive Loud listeners out there, thank you for joining us. And until next time, keep thriving onward and upward. And remember, be brief, be bright, be gone.
You've been listening to Thrive Loud with Lou Diamond. Check us out and subscribe wherever you listen to your podcasts, or head on over to thriveloud.com. And while you're there, click the Get Connected link to learn more about upcoming shows, special events, and other great promotions coming from Thrive Loud.